Hello, and welcome to Gentleman Talk, sponsored by Gentleman Apparel. You can follow Gentleman Apparel on Instagram at wear.gentleman apparel. You can follow me on Instagram at gentleman_215. Alright everybody, I'm in Puerto Rico. I'm going to do my introduction from Puerto Rico. What you're going to see next is we're going to look at the stocks that I picked last week. We're going to go over their results. We might go over a couple of the candlestick patterns, and then I'm going to compare it to the S&P 500. The S&P 500 is a good gauge to see where your stocks are. So the S&P 500 is down this week. So if your stocks are down, don't feel too bad. But we did have a couple stocks over 10% in 1 week. So that's hopefully you bought those stocks. So without further ado, let's do it.
Okay, ladies and gentlemen, so we're going to go over the StockScreener that we pulled last week, or the stocks that we pulled from the StockScreener last week, and then we have a couple of extra stocks that I added onto the list that showed up on both of the StockScreener that I usually pull on a weekly basis. So we're gonna add those to the watch list, and then we'll look at some charts. So I already filled in all the information. Couple of columns that I added was a percentage gain high. So what this means is if you were to buy the stock and sell it at its highest point, this is what you would make. And then the percentage gain close is just the close of Friday, compared to the price from, I put the StockScreener on 1.9, but the closing date I believe is 1.8. So the stocks I'm going to go over off of my first StockScreener list is MICT, and then I'm going to go over INPX. So MICT, we're down 10% on the week. It's one of the only ones that are down pretty far, but I'm still 100% in on MICT. We'll go and look at the chart right now for MICT. Okay, so here's the chart for MICT. And you can see right away that it's trying to break through the 200 moving average. It tried here once, got rejected, tried again, got rejected. So and the other thing you can see is higher lows, and higher lows. The one other thing that I do like is this hammer candle. You can see a hammer candle here, hammer candle here. So what a hammer candle indicates to me is that there's a whole bunch of buyers buying up when it goes down. So those are the reasons why I'm still in on MICT, even though we're down 10% since my last video. You can see also too that the 20 is above the 50, so we're just looking really for a couple of things. One, the price to break above the 200, and then we're looking for the 20 moving average to break above the 200 moving average. MICT is looks like it's going to be a runner. Just go back and refresh to see what this company does. So it looks like they're a technology platform in the financial technology space. Okay, fintech is taking off, so I do like this industry. So that's MICT. The next one we're going to go over is INPX. So INPX showed up, or I call it INPX, but it's Inpixon, INPX. This one showed up on my screener, and we added this to the list today. So INPX does indoor positioning, which for me, the two things that I like for indoor positioning is one, COVID, keeping people separate. Two, they want to do the cashierless stores where you can just kind of pull the products off the shelf and walk out the store, and it automatically charge a card and automatically know what you have put in your cart. So those are the two things that I like that's going on with the world that this company can basically help south. So a couple of things off of this chart that I like. It's almost the same thing as the first as MICT. It hits the 200 MA, gets a pullback, and then consolidates a little bit here, and then it finally takes a push towards the 200, but actually breaks the 200. It looks like it closed above the 200 on Friday. And if you look a little bit closer, you can see here that the 20-day moving average crossed above the 50-day moving average. I'm still a little shaky on when is a good time to buy. Theoretically, I would like to buy like Wednesday, Thursday, just because I don't think the market will be strong Tuesday and Wednesday, just because of the unsettlement with the Biden inauguration. So we'll keep a close eye on this and see when I can buy back in. I have maybe 100 or about 150 to 200 shares. So I'm just looking at a good price to buy back in, maybe a couple hundred shares more. So one thing you want to see if this price stays above the 200. The other thing is, as a good confirmation, is if the 20 and or the 50 moving average crosses above the 200 moving average, that'll give you another confirmation that this is headed higher. So we'll go over the rest of the list really quickly. RESN had a big week. Looks like you might want to wait for a pullback to get back in on RESN. EGAN got as high as 12%. Looks like it dropped, but like I said, we had a bad Friday. LODE, another good one, up 14%. If you sold it at its highest, up 10% as a close. Now remember, 3% gain a week is gold. So we don't want to get greedy and say, oh, 10% is not good in a week, 11% is good a week. If you do 10% a week all year, you'll be making a lot of money. All right, let's see what we got on our second screener list. So we got a couple of good ones here. We got WWR. They mine graphite and lithium. Their high was 10%. They closed at 1%. That had to be Friday. Watt up 38% if you sold it at its highest. Good gain here. 18% close. So when we priced this, it was at 242. And now it's at 286 with a high at 334. So hopefully that was one of your picks from my video that you liked. MRIN also up 19% from its high, or up 19% at its highest since I picked it on my screener last week. And then we have -8 on eGain. I'm a little shaky on eGain, but we'll go over eGain, and then we'll also go over HEPA. HEPA is a biotech stock. I don't necessarily like biotech stocks, but I feel as though it's a good long-term biotech stock. Pretty solid, actually. So we'll go over eGain and biotech. Just in case anybody bought eGain, I can kind of give them a little bit of strategy on when to sell or when to buy more. So if you're down, I would look to, well, I'll tell you when to sell, and then also if you want to try to buy back in and average down. And we got SINO. It's one of our bigger ones, our bigger gainers from last week's screener list, up 27%. You could have got a high of 38% if you sold it at its highest between last week and this week. So we'll go. Let's look at eGain's chart. All right, so the reason why I'm a little cautious of eGain is because it was using the you can see here, it was using the 200 as support levels, wasn't passing it, and then boom, the last 2 days it broke past the 200, so that's why I'm a little shaky on it. So proceed with caution. I think if it breaks back above 1185, I think that's a good buy point. One, because it'll be back above the 200, and that's where it looks like the resistance, or the resistance/support level, the closest one is. So if this 20 moving average breaks below the 200 moving average, that's when you want to start looking to sell, especially if the 50 moving average breaks below the 200 moving average and this price is continue to either consolidate or move down, that's when you kind of want to look to get out. If the 20 moving average breaks above the 50 moving average, that's most likely a good time when you want to average down or just buy in if you haven't bought in yet. Obviously, the price has to be above the 200 as well. So I hope I helped you out on the strategies on either if you want to sell or buy. But for now, we're just going to wait a little bit, see what happens midweek, and see how these averages and the price play with each other. And next out we're going to go over is HEPA. It looks like it's using the 50 moving average as a support level. So you can see here, it tried to break above the 50 moving average, rejected. Here, it got rejected from the 50. It looked like 3 days in a row, it tried to break through the 50. 4 days in a row, it tried to break through the 50, and we didn't have any success. And then finally, we broke through. And then the next day on Friday, it looked like it used the 50 as a support. So what you want to look for here, and you can see also that the 50-day moving average is going across below the 20-day moving average. So if this ends up crossing below the 50, crosses below the 20, or the 20 goes above the 50, whatever way you want to say it, that's going to be a good indication that this is going to shoot higher. Looks like we're gonna most likely retest the 20-day moving average resistance. So we'll see how that works out. But the other thing I like to see is lower highs. Here goes a little bit of consolidation. And it is above the zero line on the MACD level. I like that too. And then, the most thing that I like too is just the upside that you can gain from it. At price at 230 now, right? It can get almost up to, let's just see what the high is here. 287. So, sorry, I was on the wrong one. So the high here is 309. So 309 to me is the next resistance level from here if it breaks past the 200-day moving average. So these are our new 3 picks for this strategy. And then we have 4 picks here on this strategy. Those are our new picks, as well as all of our stats and results from our picks from last week. So I hope you made some money. Please subscribe. Until next time, talk to you later.